Although in line with expectations, you must be disappointed with these results, with pro forma revenue down by 2% and clean EBITDA down by 17%.
Well, at first sight, I would tend to agree with you. And if you look at it from the outside, I would also agree with you. But if you consider the circumstances of 2012, when we had to still go through with a lot of the integration work, where we are adapting to the new world of nationally regulated markets. We entered 3 new nationally regulated markets and had to pay substantially higher taxes in those markets as well, plus increased complexity and increased compliance costs, which we have to. Actually, the results are quite okay.
Now, current trading has clearly been tough for you, and you say that you expect revenues to be down in 2013. When do you expect to turn the corner?
It's really not so much about turning the corner, but it's just the fact that we are adjusting our business model right now. We plotted a clear strategy when we merged party gaming with bwin 2 years ago, but we are now adjusting tactics, and this is just reflecting on what's happening around us. We have done a very detailed analysis on what and how our markets and our customers are reacting to our customer acquisition spend. We started that analysis in 2012, and we are now seeing the effects of it. We have drastically reduced our marketing spend in .com markets. So we are going for value instead of volume. Therefore, revenues may come down a bit or will come down a bit, but we also expect that adjusted EBITDA margin will come up.
You've increased the dividend by 10%. Is that just to keep shareholders happy, or is it a real sign of confidence?
Well, first of all, we try to keep our shareholders happy by anything we're doing anyhow. But it is a sign of confidence, and is actually just continuing to do what we have announced in June of 2011, when we announced our dividend policy, that we strive to progressively increase that dividend, and that's what we are doing this year.
You say it's not a change in strategy, but you now intend to spend less on the .com market and focus on the regulated and the to-be regulated markets. What's the thinking behind this new approach?
Well, in the past, we have done a little bit too much at the same time. So this is really reflecting the focus which we are putting into the business right now. So on the one hand, we are reducing the number of markets we put in a focus on, but we are increasing the spend in those markets. So this investment will solely go into regulated and to-be regulated markets. Yet we are still very active in our .com markets in the past, and what we are doing there is we are focusing more on value and less on volume.
So has all the time and money that you've spent on integrating the .com platform been a waste?
Not really. We are not integrating a .com platform. We are integrating one platform. So actually, we are now moving all of our customers on a single integrated platform, which will yield substantial benefits in the future. That really has nothing to do how we conduct our business in those markets. But in the past, we have built a strong brand in many, many markets. We have built relevant market positions in those markets. But what happened is that just in the last 12 to 18 months, we saw that customer returns and customer yields have declined significantly.
So what has brought about this shift away from volume into value, and why do you believe it will be successful?
Well, we believe it will be successful because what it will give us is focus. We have just done too many things at the same time, and we have done them all mediocre. So what we try to do is do less things, but do them really, really well.
So how does this sit with the existing focus on encouraging more casual players in both poker and casino and games?
Casual doesn't necessarily mean non-value. But what we are trying to do is we are trying to address and service our valuable, loyal customers better, and actually putting more focus on them instead of trying to address and get more and more players in, which may not yield the returns we're seeking.
Now, you've said that this change of approach started in January, which was the same time as Jim Ryan's departure. Are the two linked?
We launched the plan in January, but as you know, launching a plan doesn't mean that you do it overnight. So that was very well planned before and has actually nothing to do with Jim's departure. We are on an ongoing basis reviewing our current environment. We are reviewing returns from our customers and reviewing our operating efficiencies. And at the end, towards the end of 2012, we reached a point when we said we need to do something. We need to optimize, and we need to adjust our tactics, and that's actually when we started to define the plan and design the plan, which we launched then in January of 2013.
Are you happy with the progress you're making with your social gaming initiative?
Actually, yes. When we launched it about a year ago, we developed a very detailed plan, and we're executing against that plan. And we just recently, in February, launched our first proprietarily developed slots craze on Facebook and on iOS. Yesterday, we launched our first bingo application, Chico Bingo, on Facebook, and we are making very good progress in launching our first sports app in partnership with Nordeus, one of the leading social sports developers on Facebook and on mobile. So in summary, yes, we're making great progress. We have been a bit late to the game, but I'm quite confident that we will hit all our targets for this year.
Now, you're also looking at new revenue opportunities, such as from Calixa, your rebranded CQR payments business. Is the intention to sell this off once you've finished developing it?
At that point, no. We don't have an intention to sell it. It would be too early. It's still not big enough to sell it yet. It's just extremely promising. It's a new business field which we are pursuing. We have made some changes there. We have completed the management team. We have a clear growth strategy now designed for our payment arm, which we, as you say, will be rebranded very shortly to Calixa. And what we do in 2 or 3 years from now remains open, but at that point we don't have a plan to sell it.
Now, the opportunity in the US seems much more real now, and you're saying that the team working there has been ring-fenced. But what in reality does this mean?
Well, as you know, we have been preparing for the re-entry to the US now for 7 years. We have always said that it's just a question of when and not if anymore, and that has become reality now. So what we are doing right now is we are operationalizing all our efforts in the United States. And that will, as we believe, need a ring-fenced approach. That means that resources are solely dedicated to making the US optionality a success. And that really needs a very focused approach again. And we have identified the resources who will be doing that exactly.
Can you update us on the situation in Germany, and can you tell us where you think it's going?
Germany is still a very complex situation, but it has improved for us as a group. As you know, we have licenses now for sports, casino and poker in Schleswig-Holstein, one of the 16 provinces in Germany, and simultaneously we have applied for a so-called E15 license in January of this year. Now the process is not clear yet, but we would expect to get a hearing on the E15 licensing process shortly. There are rumors in the market that licenses could be granted already in the beginning of May or beginning of June, but there is no certainty about it yet. We will certainly apply for a license there, and then we will continue working with the regulators in Germany to ultimately find a commercially sound solution, both for the regulators and for us, but especially for the consumer in Germany.
And you've settled your problems in Belgium. How big do you think the market is there?
Well, Belgium was a fairly small market for us, but an important market. And closing a market down never helps your numbers. And you saw it already in the beginning that our revenue has not been growing last year. That's one of the reasons we had to close down in Belgium. Now we have found a commercial solution now in Belgium. We have a partner in Belgium now, and actually we will be launching in Belgium in the next 2 weeks.
And the UK, what developments are happening regarding regulation and taxation?
Well, you know, we have a sizable bingo business here in the UK. We are following that discussion very closely, but this is one country where we are not in the driver's seat. There's obviously the big incumbents here in the UK who drive this discussion. I would expect that regulation could be in place, and that's, I guess, current anticipation by the end of 2014. We don't know the tax rate yet, and we don't know specifics yet.
And are Spain, Italy, France and Denmark performing as you would like?
They could always perform better, but we are making real progress in those markets, and this renewed focus on regulated markets, which we talked about in the beginning, will help us to do even better in those markets. They are different from market to market. It also depends on what products are allowed in the market and how are they being taxed. So the margin we are generating from those markets is different market by market, but the good news is we are actually profitable in all of them.